Look, it's A Trader with A Live Trading Show, market open to market close. A Trader's going to A Trader Cave to make professional profits while having fun all day. Come join them, and welcome to A Trader Show, a live trading experience.
I'm A Trader, talking about market manipulation, some bluffers. If you're going to trade properly, you're going to want to know about market manipulators. Bluffers, they're profit motivated. They fool traders into trading unwisely. To make profits, you have to identify bluffers. They're rumor mongers. They spread information to manipulate trade. They make false information. They use true information in a way that can be misinterpreted. They're price manipulators. They arrange trade at prices, volumes, and times that they hope change people's minds to their favor. There's also wash traders. They create artificial market activity. All these traders want you to think that they're informed. When you're looking at market manipulators, a lot of people have this one-sided opinion about how they are. Either you have to look at them without hatred. You have to look at them in a strategic way. If you look at them in that way and you realize that they're just part of the market, that's when you're going to be able to use them to your advantage. You're going to be able to make money from them. And I'll show you how you do it, especially in a value trader way. But if you hate something, or if you hate a strategy, you put yourself in a position where you don't learn what it is, and therefore you cannot defend against it or make profits from it. So let's look at market manipulators as just another strategy in the market. We can talk about the long side bluff. I have one written out, and you can do that stop and pause and read. A long side bluff. You want to buy low, sell high. It can end up in two ways, successful or not. It is illegal. It's hard to catch. Understand how bluffers discipline liquidity providers. In the next example, there are going to be two endings. I'm going to go through it pretty quickly. Basically, if our bluffer sits and tries to buy small cap, let's say it's $5. While he's setting up the bluff, he's buying them at $5. He's buying up large amounts of it, and at the same time, he's going on different message boards or sites, writing up different things about a certain stock. He has to wait for the news. It has to be real news. He's using the 10K or the 10Q and the 8K to manipulate the information, to look at earnings in a way. He's using real reports for a reason. But anyway, the new news pops up. He then begins the bluff. He buys it up. He separates large chunks into a bunch of different brokers, puts it all together, and raises those prices up. While momentum traders jump on, uninformed traders jump on. They understand that they're in a trade at this point because they did not do any research. They just momentumly traded this stock for some reason. Either they were looking at it and they were happy that it had gone up. Whatever reason it may be, there wasn't logic involved in it. Then they have to look at it since they have it, and they realize that these message boards, the bluffer is putting up people who are fighting each other, but they're both the bluffer. But the side that he wants to give in gives in to the other side. It gives a positive outlook to the stock, and the stock prices keep going up. So the people who got in on the momentum are saying, "Why get out?" Eventually, that stock tumbles, and the market manipulator is probably going to be searched. They're going to look at him, and he's going to say, well, based on that 10, based on the 8, based on these reports that I had and the new news that came out, it told me it was a good buy. But the price got up too high, and all these uninformed traders were going to ruin it, and so therefore I pulled out. Well, the exchange knows that he's lying, but since he was pretty smart in how he manipulated the boards using ways to hide his identity, he got away with it. He got a bit of a slap on the wrist at best. That's how the bluffer wins. Bluffer loses. Same thing happens. He does the run up. The new news comes out. But then our value trader notices that this stock is far off its fundamental value. The value trader then shorts what he has. So instead of it running up to that $15, $20, $25 level from $5, the value trader stops it right at 10 and shorts it. The value trader is looking for more shorts, as much shorts as that value trader can get. Let's call her a she, because our bluffer was a he. The value trader then goes to different institutions, but the institutions realize how smart it is to short this and do not offer any shorts. They take the shorts on their own. So now our bluffer is versing institutions. Our bluffer has put a lot of money into this, does a one last ditch effort for the open of the day, buys about 50,000 more shares just to get those momentum traders into it again, but the shorts are too heavy and he gets beat down. The bluffer has to make a decision whether to keep going at it and lose a lot of money or just to call it quits. Well, let's say our bluffer calls it quits. He needs to now sell his shares as well, but there's no buyers on his side of the market. Nobody's going to buy it. They'll buy it when it's far under fundamental value and it gets raised again. That's when the actual institutions are going to buy and raise. The bluffer gets beat out, loses a lot of money. There's a lot of money in bluffs on one way or the other, and you can lose a lot of money as well. So bluffing strategies aren't these things that always work. You know, there's ways to lose huge with bluffing strategies. And to know what a bluffing strategy is going to allow you to profit from that. Value traders are some of the best. Bluffers and value traders fight each other, and value traders usually beat them out. So you'll see bluffers hiding in small caps. You'll see them hiding in penny stocks. That's where you see bluffers hiding because it's expensive to execute a bluffing strategy. Small, non-greedy bluffs go undetected. Now, even with that story, the value trader beat him down and the bluffer lost a lot of money. The exchange is still going to go in and investigate based on that volume level. When that exchange gets in and investigates, they're going to realize that he bluffed, but he's going to have hid his identity very well within these message boards, and they're not going to be able to get him. He gets a small slap on the wrist once again. Keep in mind, even though bluffing is illegal, it's very hard to catch. Bluffers versus informed speculators. Bluffers are always trying to look like informed speculators. It's hard to tell them apart, but if you want to look and you're thinking about a small cap, let's say you're thinking about a small cap. If you see it go directly up and directly down, that means they knew it was going up and they knew it was going down. That is usually a good sign of a bluffer, a nice big bluff. If it's just kind of like a stairway up and a stairway down, that's informed speculators thinking about what's happening with that stock. They reverse, those prices reverse faster following a bluff rather than a speculative trade. Bluffers create the information. They do not gather information. They're creating it. Really, bluffers are not well-informed traders, but since they're creating the information, they're well-informed on what that stock is going to do. So in a way, they share traits of a well-informed trader. Talk about Nathan Rothschild in the Battle of Waterloo, one of the history's great bluffs. In June 18th, 1815, a lot of bond traders in London were awaiting the outcome of the Battle of Waterloo. The Rothschild family, if you're unfamiliar with them, still a wealthy family today. Back then they were wealthy as well. And they owned many couriers. They're a wealthy banking family. They owned many couriers. So who controls the news controls the power at that point. Their couriers were faster than the government couriers. They were quick. If Napoleon lost, the bonds market would skyrocket. So Rothschild gets wind of the victory from one of his couriers before the bond traders got word of it. It was on the 19th, I believe. He reported it to the next day to the government before it got out, and he went to the markets. He brought a couple of his advisors, people who worked for him, and he sat next to these people while those people sold his bonds before the news was out. He could profit a little bit, but since he was like a Buffett, people looked up to him on his trading strategies. People saw that, and so he knew that people would just trade with him. It wasn't going to be as profitable. He needed people to trade against him. So he had these people sell off some of his bonds. Well, the other people caught word of this, and they all sold their bonds out. He ended up buying all the bonds back. The news came out. Napoleon lost. Of course, we all know history, and the bond market just skyrocketed, made him a billionaire. It's not, this man was a bluffer. It's not as though this man was a genius. If you have the means, you could have played the exact same strategy. It blows my mind. There's not, it's not the smartest person wins sometimes. It's sometimes a person with the most money. If you had that amount of money, you have to make a decision. Would you trade for a little bit of profits, or would you try to manipulate and try to get as much as you possibly could? That's a whole different look at what's happening. There's a lot of historians that say that this story or the scenario that I'm telling you is a little off. They say that it's sort of a myth, but he did own a lot of the bonds after the war, and that is how he made an exorbitant amount of money is off these bonds. That's fact. As to how it happened, as to if he bluffed his way into them, there's a lot of people who may or may not agree with that scenario, but it's a good story as far as a bluff story would go. Bluffer versus value trader. Value traders will always foil bluffers. Bluffers causes price to move from fundamental value, and value traders are on top of that. Even if it's on the same side, a value trader is going to take liquidity away from the bluffer. It's about the capital. If a bluffer is going to try to beat a value trader out, they gotta have money, and vice versa. Value traders really just have to have knowledge about how far it is off fundamental value. Illiquid securities are where bluffers will hide. Small caps are where bluffers will hide. Because I have that short time frame, this is how a bluffer is going to come in. If you see 10,000 shares versus 10 1,000 share trades, or if you just see one large 10,000 share trade, a block, or a 9,000 share trade, let's say they're trying to keep under a block so they don't have to report. But if you just see that versus 9 1,000 share trades, your psychology to that is going to be a little different. So this is how they try to hide it, how they sell it, and how mathematically it becomes profitable to them. Once again, I do that stop, pause, and learn so I can get through these slides within 10 minutes. You're welcome to read this over. It is very interesting. In conclusion, bluffers fool liquidity demanders. Value traders can beat them down without even trying. Bluffers do get away with it. It is illegal, but they're hard to catch. They trade in low-price stocks. Failed bluffs can be expensive. Momentum traders need to be careful because they are very susceptible to the bluff. It's easy to detect if you know what you're looking for. And remember, stay off message boards. If you're having fun, that's fine. If you're into a fun trade and you want to jibber jabber one way or the other, okay. But if you're trying to get news and actually trying to make some profits, shut those message boards out. Trade with logic. Come see me on my show. I'm on livestream.com/livetrader. We do have a lot of fun. It's a wonderful show. I'm happy to be able to be doing this. And it's Monday through Friday, market open to market close.